All right, this is your market recap for April 24th, 2025. Today we played extremely bullish after reacting off of the tiniest bit of this new day new day opening gap. So we got another hourly. You can see that reaction better. Took out this low, just wicked down there into this liquidity void here, and clearly with the rejection and the closure above this liquidity, it did not want to be there. So we played bullish from there. Around market open, we saw a reaction off of this bearish fair value gap right there. We see it reacted, validates it in my opinion. We break through it to the upside, and then we come back down and tap it AM session before going upwards. And I mean, from there, the rest is history. We just went up all day. So trade of the day is going to be a big one today. It's actually not much on any time frame other than the 1 minute, just because it was just one direction, right? There's not much I can explain here. We just little leg down, SMT of these lows, which you'll see on the 1 minute, and then we just expand, expand, expand. We lose little volume during lunch, which is understandable, but we don't get a crazy retrace. So that shows how strong we're looking. The only efficiency or inefficiency, I should say. Oops, wrong one. Is this fair value gap right here between this high and this low. Reacted once, twice here, well, 3 times, 4 times, whatever. Carry that through, gets a pretty big focal point for start of PM session. Well, actually, I don't know. Come down, hit it at 3 p.m. before continuing bullish from there. So go down to the 5 minute. Like I said, not really much to go off of. Low volume at the beginning after market open. Then we shoot up, taking out short-term high, or intermediate high, external high, external high, external high. Just going from there, we at 11, we kind of reverse and just kind of kill volume. We don't see any bearish much. We don't see much bearish movement here, which kind of tells us that there's not going to be a reversal. I'm trying to figure out some other sign that it would tell us it's not gonna retrace. Can't think of one. Just took out this high. It would be understandable for it to retrace, but it's just bullish enough. I guess it's the only thing I can go with now. So we consolidate for a bit. We get another expansion up. Consolidate for a bit. Algorithm kicks back in. Take a little sell side. Rally. Come down. Last hour of trading. Take out this liquidity, I believe. And then we play bullish, targeting untouched liquidity from there. Now the 1 minute time frame. This was the trade of the day that I played out or picked out like as it was happening. I was occupied studying for an exam, so I was not able to actually take this, but this is exactly what I was looking for. So we ended up taking or looking long. One, because all the stuff I showed you on the hourly, but the main one here is these lows right here are a little too clean for me. So we opened up, even though I was bullish, I was expecting a little bearish movement to take out these lows before heading upwards. And we do that, but on ES. So ES came all the way down here and took out these lows here. NQ obviously didn't, so there's your SMT. Get a change in the state of delivery on the 15-second, paired with the 15-second fair value gap. I mean, the rest is history. Target highs, so we have highs here, here. This one was kind of like the gap between this high and this high is too big. So let me try to find one. That's exactly what that one is. But even beyond those, I mean, if you target it all the way up here, huge, right? But personally, the farthest I'd extend it is to this high, because if we're on the hourly time frame, take out this low rejection, that tells us the draw is this. And these are kind of just extra, but I probably wouldn't have had runners. I would have just taken what the market gave me and exited. So this is the trade that I was looking at here, but trade of the day, if you knew it would go up there, is all the way up to this liquidity. So apart from that, we get a little retrace. This macro, low of a retrace. This macro, not really much going on here. Again, 11:30, 11:30 usually reverses. With how early we started this move at like 35, I was expecting a little earlier of a move or of a retrace, maybe like here, for example, 11 or 10:30, 10:45. Don't end up getting that. We do take out this low, but again, very, very weakly. Don't even close below it. And then we rally up, sweep, lose volume, come down, lunge starts, lose all volume. SMT of these lows during the macro can catch a change in the state of delivery here, long targeting. Now, this liquidity, that would have hit. We come up here after sweeping this liquidity. During the macro, come down to play into this 15-minute fair value gap. Algorithm kicks back in. We target internal sell side perfectly within this fair value gap here. Extend that forward. That's perfect. During the macro helps us push up. Macro again helps us retrace here. Last hour of trading, took out this low here. Failed to take out this low, and then go seek other lows. Other liquidity. We stop this and then reverse all the way up here for the end of New York session. As far as tomorrow goes, tomorrow's Friday. We haven't had one in a while, but if we're looking for a 20 to 30% retrace of the weekly move, what am I trying to do? That's what I'm trying to do. We'd be looking at around a retrace to here. Especially after today's big expansion, I am at least looking for one to equilibrium. So 20 to 30%, somewhere between here, perfect. I like this fair value gap right here, this hourly fair value gap. I know there's a lot of lines right now, but that's standing out to me as a play. The way we're sweeping this and then immediately dropping off of it is, that as well as the TGIF retrace, as well as this big expansion. I'm looking bearish tomorrow, but see what the market gives us. If the market already retraces down here in in London session and whatnot, then we play for another expansion, whatever the market gives us, right? So this has been your market recap for April 24th, 2025.